Welcome everyone to Tax Power Hour. Today's October 3rd, 2018. And I like to start with a quick poll. I just like to understand where you're coming from. Are you an accounting professional that does taxes, an accounting professional that doesn't do taxes? Are you a non-tax person, small business owner, or employed, or other none of the above? So that will give me a little bit of context when it comes to like how technical we go into tax law and those sort of things. We haven't done tax power hour every month like we want to and wish we could. We've done it a little bit sporadically. All tax power hour webinars have been recorded and posted into the YouTube channel. So if you search Tax Power Hour or anything with my name, Hector Garcia, a CPA, you may be able to find it in YouTube. And this is going to be recorded and posted into YouTube after the fact. This is the only polling question I'll run for the time being. And we'll close the poll and show the results real quick. So we do have about 3% of the people that are attending live that are non-accountants, small business owners, or somewhere in the non-accounting world. So welcome. Hopefully, we'll excite you somehow about taxes, and the rest, and the other 97% are sort of split between tax practitioner and non-tax practitioner accountants. All right, perfect. So let's go ahead and get started. And today's content, we'll spend about 5 minutes in introductions. Let me show my screen. Make sure that my screen is showing over here. Okay, my screen should be showing now. So we'll spend about 5 minutes in introductions. Then we'll spend about 40 minutes with Eric going over the top 10 myths related to IRS and tax collections. And then we'll leave the last 5 minutes for Q&A, and then we'll talk about all the things that Eric, our guest speaker, is involved with. And we will be plugging in his content. He has a lot of things that he's involved with when it comes to educating tax professionals in tax representation and tax collection type issues. So we'll cover all that in as appreciation for Eric coming in to do this presentation. So Tax Power Hour is a quote monthly webinar series, although we haven't abided by the monthly rule. We have about 10 episodes or so in the last 2 years, so it's sort of by every other month. Obviously, tax season gets underway. We cover tax tips and tricks, usually targeted towards small business owners and self-employed individuals. And we don't have a website, but we do have a Facebook group, and we'd like for you to join it. Just search for Tax Power Hour, be a little bit more active in the tax practitioner, tax questions type of conversations. About myself, my name is Hector Garcia. I'm a CPA based out of Miami, Florida. We have a accounting, technology, tax planning, and consulting firm. There's my email if you have any questions about QuickBooks, accounting, small business, or tax otherwise, you can email me directly. And our guest speaker is Eric Green. He's an attorney. We can call him a tax attorney because that's really his area of focus. He focuses mostly on civil and criminal taxpayer representation, which means taxpayers audited, taxpayer owes the IRS money, taxpayers in trouble. That's the guy that gets people out of trouble, assuming that it's possible to do so. He's also has taught at the University of Connecticut, and he's the author of two IRS tax collection guide type of books for accountants. And he's a founder of the Tax Rep Network, which is a membership site and a podcast. You can learn more about that in taxrepllc.com. So real quick disclaimer, because we have people watching these things in YouTube afterwards. None of this stuff is tax advice, right? No one should ever be given tax advice without the context. So I think you should be contacting your accountant, your enrolled agent, your CPA, your local attorney if you have accounting or legal type questions. This particular episode is riddled with tax, IRS, and legal issues. So everything that Eric and I are saying are what we call anecdotal, right? So if this needs to be applied to your case, you need to actually seek representation. That's really what these disclaimers are here for. And we will be continuing. We're going to try to do this monthly again. So we're launching it back up monthly. Next month on November 7th, we'll be having Christopher to help us cover Section 199A, which is a big change for small business owners. The 20% deduction for small businesses. We'll be covering that with Chris, who's an expert in small business taxes. And then we'll try to follow through every first Wednesday of every month, although January we'll probably do it on the 9th. So just watch for the emails for that on that. So let me go ahead and transfer over the floor to Eric. And Eric, are you on?
I am.
Okay, so I'm gonna give you a presenter. And while that happens, let me give you some insight around the conversation I had with Eric. So I've seen Eric speak at a couple of the conferences that I go to, and I also follow his podcast, the Tax Rep Network. And one of the kind of the goals that Eric has is to help educate tax professionals in the areas of tax representation, which means helping your clients solve IRS issues in a nutshell. And Eric has been proactive in the accounting industry and the QuickBooks Pro Advisor industry, and even myself, I try to send him work, and he gets so bombarded with work that he turned all these referrals and stuff into maybe an education system to help kind of shift the power back to the individual tax preparers to help represent their clients. And what Eric is trying to do is to create a centralized place where people find information about how to represent their clients, and also for him to be a resource for that. So Eric, was that a good introduction, good representation of what you're trying to do?
Yep. No, absolutely. Hector, thank you. And for everyone who doesn't know me, I am a tax attorney with Green and Sklar's. We're a boutique firm in Connecticut, when we have offices in New York. And to give you an idea of why this is such an area of passion of mine, there are more than 14 million taxpayers in the collection division inventory. All right, roughly 1 out of every 15 taxpayers owes money to the government. The other thing you should know is I was just on with the Director of Collection, Paul Mamo. They know there are more than 7 million non-filers. And so being a tax practitioner, we're all part of the same community. And I think the goal of everyone's goal is to have taxpayers voluntarily filing their returns and paying their taxes. That doesn't always happen for a variety of reasons, good reasons, bad reasons, but it happens. And so I do a lot of speaking, which turned into a training program that CCH licensed from me, which ended up being a coaching program. And that's what Tax Rep is. I think the pictures up there, you can see the 2 books, the Tax Rep Network. The podcast is absolutely free. Go out to taxrepllc.com and check it out. We have IRS executives on, we have other practitioners on, and we try to cover kind of actual practice hints and tips for you. Anyway, as far as I'm concerned, I am a past chair of the Connecticut Tax Bar. I am a fellow of the American College of Tax Counsel. I do a lot of this. So with that said, Hector, what I wanted to do is, you and I have discussed this. I hear this a lot. What are some of the myths that are floating around that people just sort of assume, is that's the rule, and really have no basis in fact or law? And so everyone who's listening, Hector and I started talking about this, and Hector's like, you know what, we got to do a top 10 on this. I was like, all right, let's do it. Because look, taxes can be confusing. All right. I mean, there's a reason why we're all in business. If they were that easy, everybody would do it themselves. But even among practitioners, there's a lot of confusion. And when it comes to misinformation, there's a lot of it. And by the way, we're not the only ones who get confused. The IRS employees are often equally confused. And I'm going to show you some of that. Some of the things auditors will say to you, or revenue officers who are the collection folks at the IRS will say to you, is just flat out wrong. and again, we'll go through this, but Hector, I wanted to make this as fun as possible and do like, a top 10, I think things that most people will run across at some point or another. Um, and so, if Hector, if you're ready, why don't we just start with the top 10 myths?
Let's go. Let's go. And not all are false, right? Some of them are, there's some false to it and some truth to it, and that's what we're gonna discuss.
Absolutely, absolutely. So, I mean, like the very first one is something actually you and I were just discussing the other night. If you don't have the original receipt, the IRS doesn't allow the deduction. True or false?
All right, let
Well,
me so
all right,
let
I'll
me
let you
comment
guess.
yeah, I'll comment a little bit on that. So, as a tax practitioner and as a CPA, I think that my role is to tell my client that you need the receipt no matter what, right? Because you need to prove that you spent it, you need to prove how much it was, you need to prove the business purpose. It needs to be ordinary, necessary, reasonable, and legal. All that stuff needs to fall into place. I
Right.
think the challenge is that if you don't have the receipt, it makes it very difficult to prove. So I think this myth is there's some truth to it because I think everybody should have the receipt, but it's not absolutely true because I think there are other ways to prove it. What's the answer, Eric?
Absolutely, you nailed it. This is on technically it's not true, but then Hector, as you just said, practically there is there's a problem with it. And by the way, and just so everyone knows, I speak for AICPA, Scaling New Heights, the American Bar, you name it. And literally, I show up, speak, I go back to my room, and I'm doing work. Well, as it turns out, I ended up wandering into the exhibiting hall, and I discovered Receipt Bank and their competitor Expensify and Neat. And all. The software today is really eye-opening. And we don't tend to live in that world because we're not accountants or lawyers. But I agree with you. You're much better off if you have the receipt. And that's the beauty of these apps, right? Take a photo of it, you've got it forever. Even if it fades, it gets lost, destroyed. But here's the rule. The rule is the following. If it's under $75, you technically don't have to have a receipt. However, here comes the practical reality. If you can't prove you spent it, the auditor is going to take the position. Well, when it comes to a deduction against income, the burden is on the taxpayer to show they're entitled to it. Now, so if you don't have a receipt, they can take the position they're not going to give it to you. But there's also a global rule, and this is something came out of a case literally from the 1930s called Cohan. And what happens in Cohan is he runs a theater. And he's always running, back then, you're right, you would take a train to Washington, New York, wherever, and try to convince actors and shows to come to your theater. And he clearly spent a lot of money doing this. He gets audited, has no records. The IRS back then says you don't get any deductions. It goes up to the Second Circuit Court of Appeals, and what the Circuit Court said is that's not the rule. All right, you are allowed to use estimates if it's an expense we know you had to have spent. Right? You can't say zero. We know he traveled. We know he stayed in hotels. Once you come up with an estimate that's based on that, now the burden will shift to the government to show why it's wrong. So, Hector, what I think I think this is where you were going. As a practical reality, if we're talking like a lunch I had, if I don't have the receipt, I'm not getting it. But if it's something big and global, and I'll give you an example of this, we had somebody who would buy medical equipment out of these closing clinics or doctors' offices, and then resell them to hospitals, whatever else. And I'm not talking little stuff like a CAT scan machine. I'm talking about like a surgery table, that kind of big stuff, big dollars. We had an auditor say, "Yep, no, you get nothing," because he would deal in cash. But we had the invoices for when he sold it. We went to appeals, raised this, and appeals said, yeah, we can't give you zero. He clearly sold a CAT scan machine. I doubt he pulled it out of thin air. Okay. And we ended up reconstructing some of it through like eBay and other things. What are these things selling for used? And there were still adjustments, but the auditor can't give you zero. So on the little stuff, you're probably out of luck if you don't have the receipt. On bigger things, they cannot take this position that if you don't have the original receipt, you get nothing. That said, however, Hector, if you only have a credit card charge, that becomes problematic because
You're talking about people that don't have a receipts, but
right,
have the credit card statement, and they come back and say, well, I can prove that I spent it because I got my credit card statement that says I went to Office Depot and I spent $300 there.
right, right. And there the issue. Office Depot is a little bit easier, but it's like at a restaurant, it becomes a little more difficult. But again, I've had this where people who don't have the receipt, but we can show that you were like in that city, right? I have a charge for Starbucks in the morning at 9 a.m. in Washington, D.C. I have proof that I traveled to Washington, D.C. The IRS can't say, oh, you don't have the Starbucks receipt, you don't get it. No, 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 no. I can prove I charged it in there. I had traveled there for business, and you should get that.
Eric, but are you discussing at the examination level or at the appeal level?
Well,
Because that's an important distinction to make.
that is an important distinction to make. The examination level, they tend to be much more strict. It's at appeals when you can actually negotiate a lot of this stuff. So if you're listening and you've never been to appeals, don't be afraid to appeal. When I do a lot of the involved exam training for the AICPA, I always have this big slide that says at the end, don't be afraid to appeal. And sometimes, and listen, I not to be immodest, but I can be a bit of a jerk about this sometimes with the auditor who will say, oh, we're not going to agree. I see this is going to appeals. I'll be like, great, audit's over. Give me your notice. Let me get the hell out of here. And that catches them by surprise. Why wouldn't you want to go to appeals? If you've never been to appeals, let me describe it. If you can get in person, you show up, it's a conference room. There's somebody there, young lady, young man, maybe a little bit older, who knows. They're generally dressed casually, and you're going to walk them through it, show you what you've got, present, make your argument. It's a conversation. I would actually much rather be at appeals than exam. So if you've never been to appeals, my message to you from this, don't be afraid to go to appeals. It's not frightening. I don't know why the examiners, they try to make it, oh, you're going to go to appeals. Yeah, exactly. Like I'm shaking in my little tax boots.
But
Yes.
Eric, you say that because you're an attorney and you love going to court. But if you're dealing with a small business owner that's dealing with let's say a $10,000 change on an examination, they're gonna spend $15,000 to pay the attorney to go to appeal. So like I think there's also a threshold amount
Well,
in which we say I'm okay with going to appeals or I'm not because it's gonna cost me more in attorney fees.
well, no, and it's a couple things. One is I actually hate going to court, and here's the reality: I file a bunch of U.S. tax court cases a year. I haven't tried a U.S. tax court case in probably 11 years. We probably file 15 to 20 cases a year. We settle them all. It's a conversation. If you're reasonable and you have some stuff, the government at that level is much more reasonable, and you get it settled. But you're right. I mean, Hector, there's always a dollar threshold, and we get this, right? People will call our firm and say, they made an adjustment, $1,300. It's ridiculous. I'll say, ma'am, here's what you do. Take out a piece of paper, write them a letter, send them your backup. Hopefully they'll give it to you. And if they don't, I would just cut them a check and pay them. Even an accountant, most accountants are, you spend a couple hours, you're going to run through the $1,300. So there's always an economic reality to this. I mean, how much are you willing to invest? Because and again, we get this all the time. One of the ways you can challenge penalties, you can't do it in tax court. You have to pay and file in federal district court in a refund action.
And Eric, so we probably could spend the whole day talking about appealing. Let's move to the next myth so we have a
All right.
chance to do so. I mean, yeah, if this turns out to be a popular topic, we could talk about the whole appeal
Yeah.
process in a whole
Yeah.
hour or so.
Well, that may be another talk. All right. Myth number 2, which I hear constantly: you don't have a mileage log, you don't get the deduction. All right. I don't know where this nonsense started. If you've got a spiral notebook and you're keeping all your really good notes, I mean, don't get me wrong, that's wonderful, right? The date, where you were. But I don't know about you. I've got a smartphone that has my calendar. It also has GPS. I have an app I'm not plugging them. They're not one of my sponsors, but there are a number of apps that will track your mileage, and you can tell if it's business or personal. All right. Um, that's fine. This theory that you have to have had the spiral notebook, no, 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 no. I just need to show where I was, what the business purpose was, and what the mileage was. Before the app, I would spend a Sunday, usually during football season at some point, doing the first 8 or 9 months of the year in MapQuest with my calendar, right? I print out my Outlook, I look on MapQuest, I print all this junk out, and there's my mileage log. All right, now like I said, there are apps that do this. Okay, the
So
critical.
Eric,
Yep,
the lesson to be drawn from here is if you don't have a mileage log, but you do have a calendar in which you could use to reconstruct kind of like, how many trips a day you took and that sort of thing, and or your invoicing history can also reconstruct where you've been, assuming you're a field service type of business. You can upon the examination, you can sort of build your mileage log using that information. Is that what you're saying?
exactly. You simply have to have a basis for doing it. And as far as the number of total miles per year, probably you had the car serviced at some point. They generally will put the miles down, right? Tires, oil changes, whatever. We do this a lot because, Hector, as you know, and people who are listening, we do a lot of criminal tax. And a big thing about criminal tax is we deal with forensic accountants a lot. There's a lot of reconstruction, right? But you just need to have a basis. So yeah, Hector, you're right. The calendar, invoicing, right? I'm a contractor. I have invoices. I was at this house doing work, whatever it is. As long as you have some basis to show. And again, to go back to what we were saying before, the auditors tend to draw a hard line. Don't be afraid to go to appeals. All right. And it
Okay,
doesn't have to
and
be very expensive, by the way. You can file the appeal, fax the stuff over, and they can just agree with you.
and we probably should move on to the next one, but I want to ask you a quick question. You
Absolutely.
A lot of times we're dealing with folks that are using their personal vehicle for business, right? And
Right.
they're mixing, the servicing of the vehicle, the payment of the lease. I mean, all the stuff is sort of mixed into one. Um, Generally speaking, what you're saying is if you have a personal vehicle, you shouldn't even be using your personal vehicle expenses. You should only be using mileage based on your mileage log.
Well,
That's
I mean, that's not true. You can use either or. You can use the actual expense method, or you can use the standard method. The critical thing, though, about like, for instance, if you work for a business and you use one of their vehicles, then you don't have to worry about this. It's 100% business, and it's not even yours. But for most people, like myself, I have a personal vehicle, but I also drive it for work, right? If I have to run out to a client today, I'm taking my car. Um, so what happens, the critical thing here is, again, you have to have the total miles on that car for the year. You should have that from service records, whatever, but then you still need to have your log for what was business. So if I did 20,000 miles last year and I can show 10,000 of it was business, I should be entitled to 50% of the actual expenses. The beauty of the standard is, right, I don't need the oil receipts and the gas receipts and all that. I just take the standard mileage deduction times the miles and I'm done. All right, but you still need the log. Whichever you're going to do, you still need the log unless the car is owned by the business and used 100% for business. Because Hector, you can have the reverse problem. And I've gotten that too. It's a business vehicle, but they're taking it out home and the weekends and nights, and you're not entitled to that. That would be personal. It's almost a reverse situation where the auditor, if they figure it out, is going to want to try to knock out some of the lease payments or car payments or whatever, or force it into income for that employee. So you're going to need the log no matter what, whichever method you go for.
Yeah, so the log will serve as either multiply miles times business miles times the rate, or to figure out total miles versus business miles. So you have to construct a log with percentages regardless.
Exactly.
But you don't have to have the spiral log that you actually have in your glove compartment and you're tallying it up trip by trip. That's what you're saying.
Exactly.
Okay. All right. So we'll move on to myth number three.
All right. I mean, and this will be quick. You see those late night commercials, we can get rid of penalties. Like, we pick up the phone and magically get rid of penalties. Some very quickly, you can get penalties abated. Now, there is a first time abatement. All right. And first time abatement means that if you have not had any problem for the 3 years prior, and when we say problem, means you cannot have been penalized, even if you full pay. If you had any kind of an estimated tax penalty or a late payment penalty, any penalty at all will preclude you from the first time program. But if you don't, first time abatement should be available, and that truly is a phone call. However, when it comes to other penalties, you would have to show reasonable cause, and reasonable cause is not that easy. You have to show the government why you were either unable to file or pay. All right. And what I will tell you this, Hector, is very generally short and intense is good, long and drawn out is bad. For instance, I have a guy, they have their second child, wife goes into postpartum depression and becomes suicidal. He's self-employed. So for 2 years, he's got his two little kids. He's trying to get his wife stabilized. She's eventually medicated. He goes back to filing. For 2 years with that medical documentation, we got those penalties. It was easy. I mean, you submit it, they deny it, and then you always go to appeals with abatement. An appeals officer looked at it, the documentation. He said, oh, yeah, no problem. He said, I feel terrible for this guy, took him off. Versus someone who comes in, hasn't filed in 4 or 5 years, money was tight, whatever. That's not an excuse. And by the way, what you'll get from the government in that case is the following. Eric, I understand money was tight. He paid his mortgage every month. He paid his credit card every month. He even got his kid into college and did the FAFSA form. He just didn't feel like filing and paying with us. Oh, and by the way, there's 28,000 H&R Blocks. There's one on every corner in America. The government's not buying it. So you're really, like I said, short and intense where you have an event, you can do that. Long and drawn out over time where the person just didn't feel like paying, it's kind of a waste of time.
But you're
But
saying it may get denied at first and you have to appeal it.
I'm going to get, when it comes to innocent spouse relief, offers in compromise, and penalty abatement, they always get denied, almost always get denied at the centralized campus. You always have to file the appeal. I tell the client right out of the gate when they come in, this is what's going to happen. In the unlikely event we're pleasantly surprised that the offer goes through immediately or the innocent spouse is granted immediately, wonderful, but don't count on that. You have to go to appeal so you can get to a human being you can talk to.
And real quick, so we can just not talk about appeals anymore.
All right.
Can a CPA and enrolled agent appeal, or does it have to be somebody
Absolutely.
registered? So it's
Absolutely.
only the ones that go all the way to tax court are the ones that have to register with the tax court.
Well, yeah. So if you wanted to actually try the case in tax court, you would have to either be an attorney or, as a CPA or EA, take the U.S. tax court exam. And by the way, that is not an easy exam. That is a tough exam to get through. However, and Hector, I know you don't want to keep belaboring this, but I will give you another. We're not covering this today, but an inside secret. If it's truly like a documents case, right? Especially Hector, the automated under reporter, those letters, and you submit the documentation and they ignore it and just give you a 90-day letter. Your client can file the case in tax court on their own. They're fillable forms on the U.S. tax court website. So what I'll do is, if it's too small for us to get involved, they fill the form in, send it in with the $60. They'll get a letter 45 days later. Then if you haven't been to appeals, it gets sent to appeals. And then, Hector, go for it. And you go deal with appeals and get it settled. So if you wanted to actually go make an argument in court, you're right, you got to be admitted. But otherwise, you can still help the client. But either way, yes, no, but to go to appeals, if you're an EA or a CPA, you're good. You just have to be able to have a CAF, and represent someone on a POA.
Right, a power of attorney, right? Okay.
Exactly.
All right, so myth number 4,
Myth number 4.
Dear in my heart, QuickBooks. And
Yes.
by the way, you used like the oldest logo of QuickBooks you had in your archive there.
All right, I'm sorry. You know what? Don't tell Don Brolin I did this. Anyway, Don will bite my head off. But yeah, no, you know what? This is one I had from another program. But So here's the myth. The IRS is always going to get the QuickBooks file, right? They come in, they want the QuickBooks file. This is true, all right? And the reason for this, the government is allowed to get access to the books and records, both physical and electronic, that support the numbers that were presented on the tax return. All right. Therefore, the answer is, like, I always get this, like, well, we'll just print out, reports for them. No, 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 no. Now, Hector, can you guess why they want the electronic backup?
I would say the audit trail is something that they want to see.
Bingo, exactly. And why? They want to see the adjusting entries that were done. They're looking for any indicator that there's something else going on, something fishy. Like, and I had this once. My Dawn Brolin, we had a criminal case. Dawn comes to me and she said, I pulled the audit trail because they were demanding it. And she said they made 1,100 adjusting entries in the 3 days before the civil auditor showed up. That doesn't look good. Now, they may have been legit, but that immediately raises the specter of what in the world were you doing right before the auditor showed up? You didn't do it before the return was filed.
I'm gonna say something that I shouldn't say in a public manner, but if you're dealing with QuickBooks Desktop and you change the date of your computer, and I'm not saying that anyone should do this, I'm saying what happens if you
Yep.
change the date of your computer, the computer date, and you make an entry, the audit trail records it based on the computer date, not the actual real date.
I
So
have to tell you, Hector, it's funny. I got a friend of mine who is a former like NSA kind of computer guy, and he was a CPA before he went into the government. Whatever. He told me once, I'm like, well, the audit trail can't be hacked. He's like, oh yeah. He said, I can hack that. He said, I've hacked it before. I'm like,
yeah,
really? When? He's like, I can't discuss it, but he said we can hack
plus plus the new version of 2019 can delete the audit trail and only keep the original entry date, so that when you really won't ever know when it was changed or anything like that. So anyway,
Now, the big thing about this, Hector, and you know this. In fact, you reminded me of this. There is something called a period copy, because the concern is if you give the auditor the true accountant's backup, they can go all the way back to day one, and even periods that aren't covered by the audit. And most people get unhappy about allowing an IRS auditor to go on a fishing expedition through their stuff. So you can do this period copy, and I'm going to defer to you on this. I don't know bookkeeping that well, but you can do a period copy that will limit the backup that the auditor can get.
yes. Well, the other, I'll add something else. It is your patriotic duty to both pay your taxes and also make sure that we don't waste money on an agent looking at things they shouldn't be looking at. So I would strongly recommend that if you're dealing with QuickBooks Desktop, that you create that period copy, not because we're trying to hide something from the past or the future. We just want to keep the audit focused on what they're legally supposed to be looking at in the first place, because they could be looking at something from 3 or 4 years ago before the audit, and it'll just become confusing. But the only thing I'll add from a technical level is if you create a period copy, the balance sheet doesn't come through. So you have to make sure that you do a period copy, and then let's say you're getting examined for 14, 15, and 16. Then you're gonna have to pull the tax return from 2013, and you're gonna have to plug the balance sheet in there, and make sure that there's entries to make sure your balance sheet is being reported correctly based on your tax return. The period copy creates that problem where it destroys the beginning balance of the balance sheet, and that's why a period copy probably won't work if the auditor is looking at the balance sheet. So the period copy could work really well for a Schedule C or a small tax return that doesn't have a balance sheet. But if you got balance sheet problems on that period copy, they're gonna know something's wrong. Remember, a lot of people archive their QuickBooks files, so there's nothing illegal about giving someone a period copy, because maybe that was your decision. You wanted to archive the previous years. If it's not being audited, you're not you don't have to give it. So yeah, that would be a good thing to keep in mind.
Yep, no, absolutely. Moving on. So myth number 5. Again, we won't spend a ton of time on this. I hear all the time, I know I can't go bankrupt on taxes. Says who? That's not true at all. This is truly a myth. Now, I'm gonna go through this quickly, and then let's move on, because this a bankruptcy is a whole program unto itself. But basically, here's the way it works.
Wait, Eric. Let's clarify that. You're saying a tax liability cannot allow you to go bankrupt, or are you saying that if you go bankrupt, you cannot wipe your tax liability? Because those are two different things.
I am saying that you can go bankrupt. Whether the taxes can be discharged as a debt in bankruptcy depends. So, for instance, you cannot discharge a collected tax. So sales tax and payroll tax are never dischargeable, right? Because think about it. You collected the government's money. Now, if you go bankrupt, we're going to let you keep our money. No dice. If there was any fraud, civil or criminal fraud penalty, you cannot discharge that. However, if it is an income tax, it may be dischargeable. The tax year has to be at least 3 years old, right? So the 14 return would have been filed, let's say, by October of 15. Those 3 years won't run until October of 18 now. So 14 is still on the table. 2013 and earlier potentially can be discharged. If the return is late filed, it has to be on file for at least 2 years prior to filing the bankruptcy. There are some circuits, for instance, Texas, there are some circuits that have taken the position that if you late filed the return, you didn't follow the law and therefore it's non-dischargeable, but there's a circuit split on that. So if you ever have to look at bankruptcy as an option for your client with back tax debt, make sure you get a bankruptcy lawyer that understands taxes. Not many of them do. My law partner happens to be one of them. He speaks all over the country on it. All right. But their income, just know this, income taxes for years that are more than 3 years old, and that's from the filing date, more than 3 years old may be dischargeable. Income tax only. Sales tax, payroll tax are not dischargeable, but income tax may be.
And that would be an interesting one that I think will be one of your myths. You're talking about collected taxes, payroll or sales tax. You can go to jail much faster for not paying withheld taxes or collected taxes than not paying income taxes. So you
Yep.
probably want to pay your sales tax and your payroll tax first before you pay all your other taxes.
Oh, listen, I tell clients this all the time. Pay the payroll tax, pay the sales tax. We have bankruptcy lawyers that can screw all your other creditors, no problem. But you really, those taxes are brutal. Now, up here in Connecticut, we have no 10-year statute of limitations, and we charge 1% a month statutory interest, which cannot be abated under any circumstance. It's in the statute, which means if you have a failed business here in Connecticut, no statute of limitations, can't go bankrupt on it, 1% a month. We have people who literally have to leave the state. That you can never get rid of it if they won't take your offer. So anyway, let's move on to levies, bank levies. What a levy is in general is where the government comes and literally seizes your stuff. Here, they're taking the money out of your piggy bank. It could be garnishing your wages. It could be levying vendors that owe you money. Okay, but there's a lot of myths about this. First one I just want to cover, I'll have people call it, they levied my bank account, I can't use the account anymore. No. The way a levy works, and myth number 7 is going to dovetail with this. The way a levy works is the following. If the bank or financial institution or the vendor or the general contractor, whoever, who receives the levy, there are 2 types of levies, a regular levy and a continuing. A regular levy is the following. It's sent on a bank account. It's sent to vendors. Here's the way it works. The day the levy is received, if they owe you money, that money now belongs to the government. If they don't owe you money, then the government gets nothing. So for instance, Hector, I owe the government $10,000. Today I have $100 in the bank. At 3 p.m. today, my bank gets the levy for $10,000. I don't realize my account has been levied yet. So tomorrow I go and I deposit in my Bank of America account $10,000. How much does the government get? They get the amount that I had in the account when the levy was received. It was received at 3 o'clock today. At that time, I had $100 in the account. The government gets the $100. They would not get the 10,000 tomorrow.
Do they monitor? Do they monitor the balance and levy it when you have
No,
more
they
money?
don't. I know. I'll tell you who does. The states do. The states have state marshals that will literally, like in New Haven, they'll go to every bank every day with their list of accounts, and they'll just sit there with the banker and go through them. Oh, he's got money today. Grab that. Oh, he's got. The states are much more aggressive on that level. The feds do not have the manpower or the technology to go in and instantly see what you
Interesting.
have. So yeah, and
Plus, they
same.
will probably need a. They probably need a. What do you call that? You get from the judges from every state. Like you would actually get a not a subpoena. What do you call it? A search warrant or something
Yeah.
like that? A warrant to be
Well,
able
well,
to do
think,
something like that because then they're
well,
not. They don't have state control.
well, yeah, and the other thing too is it would be a real violation of your right to privacy if the federal government employees could go anytime willy nilly and look at my bank account. It's really none of their business. So unless it's assigned to them and they have the power to go and issue the levy, it's limited what they can do. Myth number 7 sort of dovetails, but this comes up a lot. And you know what? I have a construction picture here because it's generally contractors that get this one, right? The general contractor receives a levy for the subcontractor, and they tell the subcontractor, "I can't pay you anymore." That's not the way this works. Okay. What happens is the following. So they come to me, I send off a letter saying, when did you get the levy notice? All right, Eric, we got the levy notice 3 o'clock on Wednesday at 12. We got it at 12:41 on Wednesday right now. Did you owe him any money at that time? No, he hasn't finished the job yet. Well, then the government gets nothing. That's the way it works. They only can get the property that the taxpayer has. If the taxpayer has not earned the property yet, they don't get it. The government literally steps into the shoes of the taxpayer. If the taxpayer could get it, demand it, the government can get it too. If they can't, then the government can't. And by the way, and again, I want to move on because I want to keep us on schedule, Hector, but the other type of levy is something called a continuing levy, and that is only for wages or routinely paid commissions. So routinely paid commissions would be a realtor. They're technically 1099 because of the real estate industry is so powerful, but they're effectively employees, right? I mean, you can only be a realtor for Coldwell Bank. I can't be Coldwell Bank and Century 21 and I don't pick one. Whatever the other ones are. You pick one. So that, and truck drivers also, they get 1099, but they're really driving generally for one company. Those routinely paid commissions or wages, that's called a continuing levy. And you've seen this, I'm sure, Hector. The person's wages get garnished, levied. That stays in place until it is released. And the reason being is it's very practical. The government doesn't have the means to issue a new levy every single pay period. They don't have the means to do it. So that, by statute, once it's in place, that is going to remain there until you can work out an arrangement with the government and get it released.
Or when the balance is paid off.
Or when the balance is paid off, absolutely.
Right. Okay.
All right, this one I want to tell you, and I just had this morning. For those of you, and this is going to be a little bit of a plug for the tax rep and my books. An offer in compromise is a formula. It's a formula. I could teach every single one of you how to do an offer that gets accepted in 2 hours. Easy. If you can do a 1040 or bookkeeping, you can do an offer. There are some tricks to the trade, and Hector, this stuff, you probably listened to it already. It's all out in the podcast. There are times, so anyway, you do this formula for an offer, right? Income, and you deduct allowable expenses. Well, one of those expenses happens to be a payment plan to the state. So follow my logic now. The payment plan to the state would be allowed. The IRS, however, has a statute, and that statute says the following. Upon demand for payment, if payment is not forthcoming, a lien arises in favor of the U.S. government, retroactive back to the date of assessment. So if you file, like Hector, when you're filing returns and they go in, right? Well, Florida, there's no income tax, but let's say you're doing someone in Connecticut, so they have a federal and a state income tax. The federal government's position is, retroactive back to the date of assessment, we're ahead of the state. We're not going to allow any credit for that state payment against your offer, which increases your available income, increases your offer. For non-filers who come in, Everyone's afraid of the IRS. Trust me when I tell you, fear the state. Hector, I don't know if you do sales tax down in Florida. I fought with the Department of Revenue in Florida. They are not pleasant
Oh,
to
they're
deal with.
horrible. They're
Horrible.
horrible.
You fear the state most. So here's the guy who came in this morning. I got from the accountant all 5 years of returns. I am mailing in the state returns tomorrow morning. Once I get my green card back, I have ins with Connecticut and New York. So I'll call up and say, I need a payment plan right now. How much of a payment plan do I need? I'm going to try to set it up for enough that we wipe out the income for the offer formula, and my offer to the feds is going to be almost nothing. We'll offer $1,000, get rid of 120 grand.
Eric, let me unpack a little bit because you jammed so much information into
I'm
that.
sorry.
So the myth is deal with the IRS first as they're worse at the state. That myth is we're debunking it because
Oh
the
yeah,
state is worse. That's what you're saying.
the state is much worse, and let's just leave it there. There are benefits to sometimes dealing with the state, and you know what, everyone, if you go check out my podcast, there's literally a podcast episode called why you want to file the state returns or think before you file federal. There's a podcast episode that literally goes through this in detail, the strategy for an offer.
So the
But
lesson to be drawn is you file your withheld taxes first, your
yep,
collected taxes, payroll and sales tax,
right.
then your state income tax, and then finally your IRS. And because the offering compromise in the IRS will take into consideration uh, already tax liabilities that you have with your local government. That's what you're saying.
That you're paying, yes,
Yes.
absolutely.
Okay.
All right. Myth number 9, and again, this goes back to the levy where they step into the shoes of the taxpayer. There's a lot, and I have fights with financial advisors on an annual basis on this. It's the myth is that the IRS can't take an IRA because it's a qualified retirement account, right? Like 401k, 403b. The government, when it comes to this stuff, steps into the shoes of the taxpayer. What that means is the following. If the taxpayer can cash it and get it, even with penalty and taxes, then the government can levy and take it. So a self-directed IRA, the IRS can levy and take. And that's news to most people. And financial advisors will fight with me until they call their main company, talk to a lawyer there who comes back and says, oh, yeah, you're right.
So what you're saying is that you've seen the IRS make somebody cash out their 401k, the IRA, to pay a tax liability.
Yeah, so here's what happens. So the IRA, self-directed IRA, that can be cash. So part of the offer, they'll allow the 10% penalty, they'll allow the income tax, but the net number, roughly 60%, that has to be included in the offer. When it comes to a 401k or 403b, you need to look at the plan. Because if you're a current employee, most 401ks will not let you cash it, right? I mean, is while you're working there. If you can't get it, the government can't get it either.
Oh,
So
so it's only when the 401k has been converted to an IRA.
exactly. Now, if you can, and I don't want to, again, I don't want to dilly-dally, but if you can borrow money, okay, if you can borrow money, for an offer at least, or an installment agreement, here's what the government would say: go take the loan, right? Because we want to get this paid down. We will allow a monthly expense for the repayment of the loan. So, one is go get the money, pay in the amount that you can borrow, and we're going to allow you, we're going to reduce your payment plan every month for that amount that you have to pay back. And finally, myth number 10. All right, you need to be an attorney to resolve tax debts. Absolutely false. Two of the very best people at this who trained me, one was a CPA and one was an EA. If you can, like I said, if you can do a 1040 or you can do bookkeeping, you can do tax resolution. It's not that complicated. If you go through the the reason I did the books, there are big treatises on this. Who the hell wants to read a 2,000-page treatise on collection? All right, 80 pages. Here's what you need to know. Here's how it works. Here's how you calculate it. Here are your examples, your forms, and everything else. Those are my books in a nutshell. So can you do this? Absolutely. Now, if you're not an enrolled person, you're not an EA, you can still help taxpayers. 7 million non-filers. The number one thing about resolving a tax debt, Hector, is getting the taxpayer into compliance. The last 6 years of returns have to be filed. They have to be making their current payments. Someone's got to do it. I send that work out to our bookkeepers and accountants who refer us work. We can refer that back. So you can make money doing this, but if you really want to do it, you'd have to get your EA if you're not already enrolled. But absolutely, you can do this. This theory that you got to be an attorney or we're going to court, not true. Very few cases go to court, and I started mentioning this. It's very expensive. Most clients don't want to pay for it or can't. So we're getting it resolved other ways. But if you are a CPA or EA, you can absolutely be helping taxpayers. And frankly, my argument would be you should.
And all these companies that show up on TV saying you owe the IRS $10,000 or more, call us. Is that what they're doing? They're doing offering compromises, or is it just a big sham?
Well, I'm going to tell you what in theory they should be doing. What they should be doing is the following, and I'll be very quick. Somebody who calls me up today, Hector, you call me up and say, Eric, I owe money to the government. What I'll tell you is the following. Bring me the notices from the government, bring me your last 3 years of returns at least, and bring a check. And they'll say, what's the check for? And I'll say, well, I charge for the consult. And they'll say, don't you do free consultations? And I'll say, Hector, this phone call we're having right now? That is your free consultation. But then I'll go on to the following. I don't know what I can do for you until we sit and go through it. By the end of an hour, when you leave my office, you should know what we're going to do and why we're doing it. You should be able to go home and say, hun, to your wife, I'm going to do an offer. This is the math. This is how it's going to work. And you should be able to do that. And if you can't do an offer, we're not filing offers. My problem with the national companies is they promise you we can get rid of it for, and I hate this, pennies on the dollar. They don't have your stuff. They have no idea what they can do. And they tend to file offers and take advantage of people. And they're not cheap. $5,000, $8,000, $10,000. And by the way, they still have to get you into compliance. So I have taxpayers who have dropped, one of them, $37,000. They've done nothing for him. He's in the same position, actually worse off than when they found him.
I've seen that. Yeah, absolutely.
No. So
Um,
if you know what you're doing, you should be able to do this and help people.
so
And
real quick before we plug your stuff, let me go over the questions that we have. So
okay.
one question is, I just received a payroll levy notice or levy because of payroll taxes. If you do nothing, how long does it take for the IRS to be able to attach to the bank account?
Well, if you've already received the levy itself, then it's already hit the bank account. So it's a little
Or
unclear.
notice, what about a notice of levy or notice of levy?
Well, but again, it depends. If it's the threat to levy, so here's what happens. Outcomes when you owe money comes a CP 501 that says, hey, you owe us money, send us a check. Nothing happens. Out comes a CP 503 said, hey, idiot, we sent you a notice. Why didn't you call us or send us money? Ultimately will come a CP 504, which is certified. And now it says, we're going to levy you if you don't contact us and deal with this. Finally will come the final notice of intent to levy with the right to a hearing. And that gives you an appeals hearing, right? And you could actually take a collection appeal. After that, the actual notice of levy on the employer, they've levied the account. And generally speaking, if you log in, you'll find that your account has been wiped out to zero. Because they went in and they swept, they send it to you at the same time they send it to the bank. They don't give you a heads up, we're levying you tomorrow. They'll take it. So I'd have to see the notice to know which one it was. But the way that you deal with a levy, either avoiding a levy or dealing with it once it's hit, is the following. You have to get into compliance. So if you're missing returns, you have to get in the missing returns for the last 6 years. Number two, you need to be making your current payments. So right now it's October, all right? So we have just started third quarter. So this week, if you had a deposit due, you'd have to get a deposit in for fourth quarter, right? You need to be current for the current period. If you're self-employed, you should have made your first, second, and third quarter estimated payments, right? So the key thing is to get into compliance, call the government, ask, if you can't make your payroll, ask for them to release it. They'll usually do it once, but they tend to draw a very hard line because as I've just laid out for you, Hector, they've sent a whole bunch of notices. Where has this taxpayer been? Why aren't they picking up the phone and calling and dealing with this, getting into a payment plan? They may be uncollectible. There's lots of things you can do, but you have to talk to the government, which a lot of people don't want to do, frankly.
Right, right. Who's got 3 hours to spend on the phone?
Oh, no, no, heck, call ENQ, baby.
I don't know what
Have you
that
tried
is.
this? Oh, oh my God. So anyway, uh, I don't know if I'm supposed to be plugging anyone on this, but it's a program where you sign up with them. They are like holding your place in line, robocalling the government. So if we have to call the government, like Amanda in my office, who's an EA, she logs in, she dials in, she gets through to the IRS in under 3 minutes
I
using
don't
Call
understand
ENQ.
how this is an industry. Like, how is holding for the IRS an industry? It's
Well, so Hector, here's the thing. My tax rep members, right? I have each year more and more. We have this $100,000 challenge going on. I think every member may add over 100,000 to their bottom line. 14 million people in collection. And by the way, I know people are like, well, lawyers are dealing with it. Let me just tell you quickly. When I did the CCH program for them 8 years ago, we went and looked. In Martindale Hubbell, there were 980 tax lawyers who listed tax controversy or representation as stuff that they did. Do you know how many listed today? 172. Nobody leaves the
interesting.
government anymore. It is not lawyers that are doing this. It is EAs and CPAs. The need for representation, trained representation, is enormous.
And what's interesting, a lot of EAs are ex IRS employees because they get the certification automatically after they retire.
Yep.
Um,
If you're a revenue agent or a
revenue.
revenue officer, you get it automatically after 5 years.
Okay, so that thing that you mentioned just now was called Call ENQ. So
Call ENQ.
callenq.com. Yeah, I'll send the email
Actually,
with
wait,
the link
Hector,
as well.
let me email you because so anyway, so let me tell you something. We love this so much. So they exhibited at one of our conferences a year ago. We called them. We loved it so much. I emailed the owner of the company and said, "This is awesome. I would totally plug you." They gave my members a free 100 minutes with this code. If Hector, when we're done with this, I will forward it to you. You can forward it to the listeners. It will give you the first 100 minutes for free, so you can test it. It's
That's awesome.
awesome. If you have to do this, it's awesome.
Okay, email me that code. I'll send it to everybody. Okay, so let's talk about the other things that you're involved with when it comes to educating tax professionals. So let's start with Tax Rep Network. What is it?
So
How does it work?
this is the coaching program. So when I did the CCH program, what happens is, people are buying it, they're watching it through CCH. I start getting all these emails and phone calls. Hey, Eric, we love it. Can I refer you a case? Well, there's a limit to how many cases I can take. So what I'm telling them is the point here was for you to build your practice. And people say, well, I don't really know, I don't know what I'm doing. And so I said, well, I'll coach you. And so initially I'm sending retainer agreements and I'm 475 an hour now, at the time 450, whatever. And then finally what I did is I went out to the bunch of people that I was doing a lot of coaching with. I said, look, why don't we just agree to a flat 1/3, which is like $297 a month. You do the case. You take the $4,500 for the offer. You take $2,500 for the installment agreement. You work it as best you can. I will review it and help you. And that's how it started. And it just keeps growing and growing. The podcast was me basically just going out there and talking. And so what I've been doing now, because the popularity of this, we've got a program going on now that basically will knock that down to $197 a month for 12 months, because the goal is to give people time to start building up their practice here. But this is very lucrative, and people in trouble are everywhere. The biggest challenge, and don't spend money on expensive marketing plans, lean lists, all that stuff. It's nonsense. You just have to get the word out. And today, Hector, blogging, email marketing, I spend very little on marketing, and we are 18 people today. We were 4.5. We were 4 people 3 years ago.
So Erica,
Um,
I did a quick poll that says, hey, if you want to get just like a one email summary of like what the coaching slash membership program for Tax Rep Network looks like. So I'll send you those emails so you can send them one email with that
okay.
information. That way we can move on. So in a nutshell, the coaching program contains, I guess, education
What
material and
it
also
it has,
access to you.
yeah, we have a video library. We've got basically anything we use here. So video library, because offers and compromise, innocent spouse, payroll tax problems, you name it, IRS exams, all that. So we have a video library. We have checklists. We have our own marketing stuff, which you can absolutely use. But mostly, I got to tell you the truth, most people, you can go get, training kind of, it's all over the place. Mostly it's people who want to be able to email, say, Eric, I got this problem. What do you think? Or Eric, the revenue officer's saying this. And I'll send you a fax. Here's what I would respond with. And it's really the point of the program is the coaching. It's to get our members so that eventually they don't need us anymore. They've built up their practice and they are now tax resolution masters.
You pay a one fixed monthly fee and you get 20 years of tax representation experience in one email, right?
Well, that's just it. And the other thing too is, and people always ask this, it's monthly, cancel anytime. I have listen, our law firm is attached to this. We have no interest in trying to take people's money.
Of course.
So, no, and so the books, I created a discount code if anyone's interested. There are ebooks as well as hard copies. It's at tgpublish.com/shop. You can go. I probably should put them on Amazon. Amazon takes 65%. Did you know that?
No, 16%, man. Where you get 65% from?
We went. It was 65% is what it said. I'm like, screw that. I'm not giving you.
I don't know. Let's talk
All right,
offline
I gotta look
because
into that then.
I have a lot of Amazon clients and it's not 60. Maybe
All right.
you're talking about also publishing through Amazon and printing
Yes.
through Amazon. Yes, that would be high. Yes, of course.
Yeah. So
Okay,
yeah,
so
no,
you have two books. One's called IRS Collections and the other one's
yeah,
Resolving Tax Debts.
they're both the accountant's guides. One is the accountant's guide to IRS collection. It will walk you through the entire collection process with the exhibits, what the notices look like, because this is not a complicated area to practice in, but it's like roulette, right? I mean, not roulette. It's like craps. You go to a craps table, it looks very confusing if you've never done it before, right? Come out rolls, over, under. But same with collection. Everything seems random. Can they take the house? Can they lien? Whatever. It's actually not. It's a very simple process. We walk you through that. The second one is where we say, how do you do an offer? How do you do an installment agreement? Literally the nuts and bolts of the mechanics of this stuff.
Do you give these books for free to the members to the Tax Rep Network?
Yes, the members get everything for free. They get the books for free. They get the conference we do. We're doing a full day conference on November 30th at Mohegan Sun Casino here. Everything's for free for the members. It's all in.
That's pretty cool. Okay, and you also have some webinars coming up, right? Some webinars of your own.
Yeah, well, we're doing stuff with Don Brolin on forensic accounting. I gave people, that's the link. It's on the Tax Rep website, is the podcast. You can get it in Google Podcasts, iTunes, I think Apple Podcasts. It's kind of everywhere. So yeah, we did part one a few weeks ago, the forensic accountant. So part two is going to be on the 25th. What to do when the audit goes sideways, dealing with the auditor and those sorts of issues. And for anyone listening to this, use Hector arranged a discount with us, Power Hour. All right, so it's $79. I think usually you'll save $30. It's a 3-hour webinar on forensic accounting, which I think will be very helpful. If you missed the first one, Dawn and I, of all the emails for people that couldn't arrange to be there, we're going to do it again. So we're going to do part one on the 18th. We're doing it again, and then part two is going to be on the 25th. Use the code Power Hour that Hector arranged, and you'll save $30 on each.
Okay, I'll email people the link and the code as well, and your podcast, which I think is the best way for people to at least get started, because that's no cost, nothing, no commitment from that perspective. Let's talk about the podcast real quick.
I do it weekly. Generally, if you look at like the first 25 or 30 episodes, it's just been me. And then now I've got the IRS executives calling to come on, like Paul Mamo, who's the director of collection, called and said, can I come on the podcast? I want to talk about the new payroll initiative. And I know Paul. I mean, we've been friends for years. I'm like, you listen to my podcast? He's like, oh yeah. He said, it's always good to hear what you're saying from the practitioner side. So I want to hear what practitioners think. So we've had the head of criminal for the North Atlantic Territory on about confidential informants, bank structuring. So I tend to invite on people who can give information to my listeners that we get because I chair a committee for the American Bar Tax Section, but most other people walking around just don't have access to. So again, you can go check out the stuff on there on offers, on compliance, on exams, what to do when the auditor is batshit crazy. Any of that stuff we have on. In fact, I'm going to have Tigda, Treasury Inspector General, on in a little bit to talk about how do you go after the government if they violate your rights.
Wow. All right, Eric. So I think that's it for your stuff. I'll go ahead and take the screen just to kind of wrap it up.
Absolutely.
Yeah. Thank you so much for spending the time here. For everybody that's listening, look, he's a busy tax practitioner. Tax representation practitioner. Eric's very passionate on educating the world and on just better handling the IRS, and it definitely shows through. Eric, I think there was some fantastic content, by the way. I wish, not I wish, because we could always do more, but I wish we had more time, I guess. So I just want a quick polling question to get some feedback in terms of they learn something new, right? Were they familiar with most of it, that sort of thing. And Eric, we'll love to brainstorm about having you back again. Obviously, Eric is trying to sell his membership program, so because that's the only way to get good at this is to get good advice and to get good information. I mean, bottom line is you can't watch a 1 hour webinar and all of a sudden be a perfect tax representation practitioner. I mean, you got to practice. You have to get some guidance. You have to get some advice. I personally, I'm a CPA. I do thousands of tax returns. I've only do representation for a few of them, the ones that I feel really comfortable with, just because there's so many moving parts to it. And obviously, Eric has made it a career to know and understand all these things. So, and Eric is very available. Like even I'm not part of his program, and I email him every once in a while, and he's very generous with his time answering questions about tax representation. So I appreciate that as well, Eric.
No, thank you, and thank you for having me. It's
No,
been a lot
it
of
was
fun.
great. It was great having you. We'll discuss about having you back and maybe deep diving into specifically like levy collection appeals. That sounded like something we could have gone more into, but just no time. Okay, so next month we'll do section 199A, which is the 20% reduction of taxable income for all small business owners in 2018 based on the new tax law. I think section 199A is the most confusing part of the entire tax reform. So we'll try to break it down with Chris, a friend of mine, CPA, and then we'll move forward, try to move forward once a month on Tax Power Hour. Other webinars that I'm involved with, QB Power Hour. I think most of you know that. There's an episode tomorrow at 12 p.m. Eastern. To register for that, you go to qbpowerhour.com. And I do have a new webinar that I just put together. It's called Video Marketing for Accountants. I've done a couple sporadically, but I have a YouTube analytics expert, nothing to do with tax. I'm plugging that. So I have a YouTube analytics expert that's gonna like break down my own YouTube channel and kind of explain to you what type of videos people watch and not watch and why. So that should be fascinating to kind of like see firsthand, how video marketing works. And like Eric was saying, if you're getting into this industry and you're learning about tax representation, best thing to do is to just create some videos about the new things you're learning. I mean, there's not that many videos on IRS tax collection and levies, and the only ones that are out there are produced by the IRS, so they don't have much credibility. So if we have tax practitioners creating videos educating people about the process, and Eric, that goes for you too. There's no reason why you shouldn't have your own YouTube channel with a lot of content on that. So you would be the type of stuff that you should be watching as well. So anyway, those two webinars are free, just like QB Power Hour, and that's it. Join us in our Facebook group to continue the conversation, ask questions. I'm going to invite Eric to the Facebook group as well. And there's my email if you need to email me for whatever reason. Thank you, folks. Have a wonderful day, and thank you, Eric.
Thank you, Hector.